Hey guys, Trader Under 10 here. I wanted to do a quick video for you on how we perceive or how you perceive your charts. And what I've done right here is I've set up two things. I've set up what I look at my default chart setting and how my blog looks. And the reason why I've done this is because what I've noticed is that how I scan charts on my default setting on stock charts completely differs my perspective and my viewpoint on what a good setup is compared to what I do on my blog. And if I want to be consistent, I want to try and make it and I want to show you guys good setups, then I really should be using my blog more often, my blog setting more often. But using a different how should I call it, chart style has been affects how you actually look at a stock. And it kind of, what I want to kind of do in this short video is show you exactly how that's working. For the, I'm going to use two examples. The first one is MCEP, Mid-Con Energy Partners. I featured this on my blog on Monday night or Monday afternoon, and this is my default chart setting. I have RSI 14, RSI 3. I have 3 moving averages. The simple 50, the simple 200, the exponential moving average, the 20 exponential moving average, parabolic SIR, Bollinger Bands, Keltner channels, and the Ichimoku cloud. And all of this, especially the Ichimoku cloud, has pushed the entire chart to the left. Now it's only showing, just over 4 months worth of candles, bars. Along with that, I have the MACD, 3 stochastic indicators, the accumulation distribution line, PPO, and the average directional change. And this, looking at this chart using my default setting, well, I mean, it's formed. Let's go to the annotate button right here. On this chart setting, it's formed kind of like a, on first glance, it's kind of formed what looks like a cup and handle. You can draw it right there. And that's a 3-month cup and handle, essentially. You're like, okay, well, that's like a decent setup. You go to a 3-month breakout. Looks like around $6.94 or just under $7 a share. But I can't really tell much from that chart. Now, if I go to my blog setting, this is what I feature on my blog. Is that now that cup and handle, I can still see it. It's the same thing that is on this chart. It's just a little bit easier to look at. And the cup and handle is actually right here. What I was looking at is the 695, like that. And you can see the long 3-month cup and handle formation that's been formed from 695 and then 731. I guess what I'm trying to get at in this video is when you scan for your charts, trying to be consistent with how you view your charts. When I scan, for the most part, I use my default setting, and my default setting sometimes isn't, I miss certain setups because I'm not looking at them. If I look at this, that's not, that's doesn't look as good of a setup as if I look at right here. Now this is formed. If it breaks 695 and then it's got like a really big base at 731, if it breaks out of that base, now we're looking at, the next resistance really being its 200-day moving average at 1213. And you might be asking, well, why don't you use, your blog setting or this standard setting? I call it standard because if you actually go to stock charts and you log out and you pull up MCAP or MCEP, that's the exact same, chart which you just saw. It features, just 4 indicators, 2 moving averages, the RSI 14 and the MACD, and that's why I like using that for my blog, because stock charts features it FinViz features it. Essentially, well, it doesn't quite feature it. It only features two of the moving averages, but also, and it also features the simple 20-day moving average. But I feel like simpler is the better. This helps reinforce, this with all this crap on your screen, helps reinforce things. MCP. Using the stochastics. Okay, well maybe it's been on this run from mid-April and it's run up, and it might have two of the stochastic indicators are rolling over. However, the accumulation distribution lines now still poking up. Like it almost confuses you a little bit too much. So, it has its good things and its bad things. The other thing I want you to look at is AMZG, and this was the other example I wanted to use in this video. AMZG. I actually got this off my FinViz screener. I just wanted to pull it up because I saw this kind of big base. And when I pulled it up on the blog setting, you can kind of see you can see a very defined level of resistance at 20 cents a share. That's obvious. It even highlights that for you. And that's a 1, 2, 3 points right there that it's tested 20 cents a share, and that's an obvious line of short-term resistance. Now, if I pull that up on my default setting, you're going to see something completely different. Oh, never mind. It's because I logged out. Hold on. Log back in. So now if I pull it up in my default setting, AMZG, you don't see that defined level of resistance right there. You do see it partially. If we round 198 up to 20 cents a share, okay, so now it's sitting at 20 cents a share still. But this doji candlestick right here, it doesn't feature that price label, and now it changes things. Like 20 cents a share, or trying to break 20 cents a share 3 times is different than 2 times. And just from a simple eye, or when you're scanning your stocks, you can kind of see how that becomes convoluted. And really this puts more emphasis on, you don't see the fact that on the default setting right here, it puts next level resistance at 21 cents a share. But on the blog setting, you don't see that. So I guess that's what I'm trying to get at is, try to keep your chart style as consistent. If you scan with one chart style and then you chart with that chart style, then use the same thing, because your perspective on what is a good setup is going to change. For me, what I'm doing, I've noticed, is I scan with my default setting, and then I come over to my blog setting and type the ticker in, and it'll be completely different. It won't look as good, or I'll miss certain stocks because they look good in this shorter time frame or this convoluted time frame, and it's completely different. It's a completely different perspective. What I can gather from this, I think this is almost a better example than MCEP. What I can gather is that the Bollinger Bands really have tightened over the last 2 weeks. Ever since, I'd say, mid-April, you've seen the Bollinger Bands really tighten. And then, yesterday and then today, they've kind of, Friday and then today, they've kind of started to poke out again. And today, there was a candlestick that poked out of it. The candlestick kind of poked out of its upper Bollinger Band, which is just slightly bullish. You also see on the accumulation distribution line that it did perk up. So you do if you use different indicators and you do start to play around with more advanced indicators, you do see things that other retail investors or basic retail investors wouldn't be able to see. However, just make sure that whatever you're doing is consistent, because it really does change your perspective on what a good setup is and how you're going to trade it. This is only 4 months, a little over 4 months. This is now 6 months. If we pull this out even more, we pull this out to a 2-year chart, you know, you can kind of see how far AMZG has fallen. If you even pull up MCEP is a better example. You know, now you don't even see that resistance at the $7 resistance here at 721. That is a big level of resistance. They don't, the price label, they don't feature it, but 695 is still a big level of resistance. So, but if you know, if those two levels of resistance break, you can see how far MCP has fallen, and where it could possibly go. You know, it could go back to where, you know, it's 2014, or it was from the majority of 2014. So really, all I'm trying to get at in this video is stay consistent on your setups and or on your, you know, your chart styles per se, because I could play around with this even more. Go to the stock charts default. You know, that looks different if I pull in the price labels. That, you know, you do see 695, 731. You know, again, like you're looking at different. I think actually AMZG is a better example for this. Look at price labels. You know, you don't get that 20 cents a share, and they don't even feature that 21 cents a share right here. You pull up. I don't know who Tom is. Tom's Daily Stocks. Again, price labels. Now they have 26 cents a share being the next level of resistance. So, I mean, it all becomes very relative about the eye of the beholder. And I always want you to realize that. You know, let's pull up one more. Erin's Daily Stocks. I know she's a big PPO person. And now they have, you know, she has 20 cents a share and then 23 cents a share. Kind of hard to see on this. So, like I said, it's all relative. It's in the eye of the beholder, and just stay consistent, because what I have found, and what you guys might find, is that the more you bounce around looking at other people's styles, or if you don't keep to your one style and stick with that as you go along, then you're gonna run into problems. And I found that I've been missing setups, or I haven't quite found, or I've had to, you know, flip between multiple styles to find setups, and that's kind of wasted energy. And you're trying to be as efficient and effective as possible when you're looking for stocks. So that's kind of like the point of this video. So I hope you enjoy.